Good morning, everyone, and thank you for joining us. I'm Dan Cook, filling in for Todd Rich here with Brian Caprice. It is, and happy Friday to you all. It's Friday, May 20th. We've got not a lot of news today. We've got some market movement around a few different areas. We're going to be taking a look at all of those as well as the headlines. As always, before we begin, do want to remind you trading does involve risk. Only use risk capital. Risk capital does not include rent money, mortgage money, car payment money, whatever money you need to live day to day, that is not risk capital. Only use risk capital when you trade. Take accountability for your decisions. They are yours and yours alone. We're going to be taking a look at some key market levels, some of the things happening in the market. This is for education purposes only. It is not a recommendation to buy or sell any financial instrument. And with that, Brian, I think one of the headlines I'd love to kick off with, because this really just made my day, my Friday, seeing
Yeah.
this.
Yeah.
I'll share the roughly the headline that we'll take a look at, which is pound yen tackles 50% Fibonacci after bouncing off the 100 MA. That seems simple enough, right, Brian?
Mhm.
But
Yeah, yeah. I mean, we talk about the 50% as being a very common area, and I occasionally get it. Why don't I use more indicators with things? And again, it's for me, it always goes back to the same root. Like, understand how is the indicator built? What is it using to create whatever it's showing you? And really, what is it meant to tell you? Like, everybody thinks like, oh, I got the secret sauce. I got this, and then if I combine it with this, I can do this. And that's why I always like, again, I focus on the keeping it simple, and focus on supply and demand. And I'll throw fibs up there as, because again, people like getting something that seems like it's like magical and mystical. But, you know, interesting article from xm.com. They're just, they're a broker out there that does some analysis as well. And if people see this headline and again, talking about the 50%, when you click on the article, it's really, really funny. This is the chart that they give you. They talk about, here are the technicals. This is what we got going on right now. And then they end up with this. And when you got to look at something and be like, oh my God, what the heck am I looking at here? It always makes me laugh because, especially with fibs, I mean, you can draw it from a million different places and you can make it really say anything that you want. And they have so many different fib draws on here. There's at least 2 or 3 of them that I can tell right off the bat. And they have a MACD on there, and they have an RSI, and they got a stochastics, and they got a 50 moving average, and a 100 moving average, and a 6-year high, and a 74 and a 64-month high, like, and a 2.5-month low. Like, it just gets to be crazy when you look at all these things. And they got Bollinger Bands. I can see that on there now, and a couple of additional moving averages. So it's always funny when you see analysis out here, and then you end up with this, and then I hope people send these guys messages to be like, what the heck are you trying to look at? Like, how can you decipher anything from this,
That's the amazing thing. And this is probably why it makes you smile so much, because it reminds me of me circa 2004.
Yeah, yeah. People are like, technical analysis. I got this. Add indicator, add indicator, add indicator, and I just
Oh yeah, no, it's you could literally make that chart say anything you wanted it to, and you've got indicators that are. I'm just going to touch on it real quick. Indicators that are all telling the same thing. In the case when you've got there's different types of indicators, and if you're using say all momentum indicators, and they're all at the same settings, guess what? They're all going to tell you the same story, so they can make you believe whatever your assumption already is. Hey, now you have your justification. And just wanted to kick off because I'm a big believer in the technicals and looking at price action. Love to use the fibs, but yeah, this chart, wow.
Like I said, these are great. 64-month high, 2.5-month low, 74-month high, more than 6-year high. Like they're just throwing everything out there. It's like this is like next level data analysis. If it takes a 20-year veteran to go, oh my God, what am I looking at? Hold on, let me start. If it takes me 30 minutes to analyze what you're trying to tell me in the chart to see if I can actually pull anything from it, it's fun.
Yeah.
So that was our little fun piece of the morning today. We talked about it and we laughed, and they're talking about short-term oscillators and transmitted conflicting messages and directional movement. It's like this is why the average investor is just so lost with things, because they're like, wait a second, what? The short-term oscillators are transmitting conflicting messages and directional momentum? What the heck does that mean? It's so fun. And again, climbing simple moving averages are endorsing a broader bullish structure. It's like, wow. It's like, hey, write me an article that will confuse 100% of the people that are reading it. So pretty funny. Anyway, what?
I was just gonna say, it's like going to the doctor and they've got something long about, oh, you have this cuticle disruption, and really it's just a hangnail. You
Yeah,
know,
yeah, yeah. Right. Yeah.
yeah. But
So
yeah, that's
anyway,
why keep it simple.
yeah. It's just funny. So as far as kind of movement today, I mean, we did have retail sales earlier this morning. It was really, really good. The pound is the biggest mover right now. The pound yen is up 157, and then obviously the pound dollar up 56. Euro pound down just a little bit. Most of the movement in the pound though has happened over the last 24 hours. Actually, yesterday morning was kind of the bottom for the pound um, in many of the pairs. We kind of mentioned it being looking for reversals and turns, and it really kind of hit some of our profits and then just took off. Besides that, with the elections today, there's just been a couple different headlines. China's got a few of them out there. Um, for the most part, there's really, I mean, minus some kind of major headline from the G meetings. There's not really much else going on. Right now the VIX is down. We're seeing all the indices up. There is a couple things that are a little bit concerning. One of them is kind of a comment, and this is in AP News talking about basically the war fuel surging prices in Europe. And we knew this. This is not anything new. But we're talking about kind of what the next step is and raising interest rates. I mean, we keep hearing out of the EU. It's like, yep, we got to start raising. We got to start pulling stuff. Inflation's getting out of control. And in talking about kind of what's happening, you know, this gentleman here, obviously I don't know who he is, Mr. Ronzono. He inspects a construction site near Milan that he shut down in March as costs of materials skyrocket. He can't complete a half-built roundabout at an intersection known for fender benders because of asphalt, cast iron pipes, and concrete are too expensive. Right? Everything was made worse by the war. And again, there's like 108 billion euros invested in things like this. He laments that his company has already lost its 3 busiest months and expects the worst is ahead. That kind of jumps on top of another article that we're seeing by Stephen Roach, talking about stagflation. This is something we've mentioned for a couple months now that nobody wants to talk about it, right? But it's a real possibility because, and again, this is not something that happens all the time, but it's when you have very, very high interest rates and you basically have to go into a recession. It's kind of like the worst case scenario. It's the bad and the bad. Normally, when the economy is not doing well and you go into a recession, you cut interest rates to make to stimulate your exports and things get better. But when they're already at zero, you can't cut them any lower. You don't have that option. It basically says that he calls stagflation is his base case and warns that the market is unprepared for the consequences. It's kind of crazy when you have somebody that says, this is just the base case. It's like basically guaranteed. And he's the former Morgan Stanley Asia chairman, so it's not like he doesn't have any idea what he's talking about. He said the markets are not even close to discounting the full extent of what's going to be required to bring the demand side under control. And that underscores the deep hole. So, here he delivers stagflation warning, calls peak inflation debate absurd, and I agree with him. I disagree with the whole transitory thing. I don't think we've hit peak inflation yet. A lot out there, and again, we've really seen the dollar kind of calm down lately. Today, actually, right now, the dollar's just kind of stuck and bouncing between those two levels that we talked about, where there's buyers, and right now it's considered up 0.09. It's not really doing a whole lot. But again, another big name saying that the worst is not even here yet. So again, in this week so far, I mean, this is kind of like the week in review, but we've heard Kosh Carey talk about how we may have to put the United States into a recession to get inflation under control. You have Powell saying we waited too long, we should have done things sooner. We're going to do 0.5 both times, and the market was like and did nothing. I mean, it literally laughed it off like it was a joke, like he didn't say anything. Even though he made hawkish tones, basically saying that the confidence in the Fed isn't there. Another article also this morning I want to bring up to you guys is there's an article about why the Fed matters to regular Americans in one stunning chart. And it's on Yahoo Yahoo Finance if you guys want to look it up. But the chart that they bring up, talking about home buyer mortgage payments, are up 43.4% over the last year. When you look at it, 2021 to 2022, for the average median price, they basically take the average home price and then calculate what mortgage payments would be on it. It was between $1,500 and $1,700 for all of 2000, all of 2001. Now, for that same price, if you were to get the mortgage right now, it's up at $2,447. So it's added just about $1,000, just under about $1,000 in 1 year. They've added to the mortgage payment. We just started the raising cycle, so. Again, a lot of people don't know the Fed, don't understand the full range of interest rates, but it's amazing. And yesterday I actually looked at, again, if you don't know a lot about interest rates, we were talking about how interest rates were for mortgages were 10.3. they were, I'm sorry, not 10.3, 5.3. They were actually 5.8, and there's a type of mortgage called a 10.6 arm. It actually touched right at 7%. It has pulled back a little bit, but we're talking 7%. The last time that the mortgage prices were this high, or interest rates were this high for mortgages, was 2008. And everybody knows what happened in 2008. So yeah, and we just started. So it's kind of crazy, but the market right now isn't doing much with it. We're not hearing any comments right now. With that said, we've had so much negativity in the market. Things like the ES were obviously beaten up. I mean, if I scroll back a little bit, you can see we were way much higher, and we pulled way farther down again. But right now, we are mounting a little bit of a comeback today, and we're up about 1%. I wouldn't say there's a lot of momentum there. I mean, yesterday was quite choppy back and forth, and we kind of bounced between levels. We talked about 39, 28, 50, and they hit it and dropped down again and found that lower level. And again, we're kind of playing ping pong. We hit it again. We went back down again, and eventually, after about 3-4 hits, it breaks through. And it did. It broke through a little bit, but I wouldn't say there's any major conviction on this one. And the same thing, the same sellers up top that eventually got kind of worn down, the buyers are kind of sitting there as well. Have gotten smashed a few times too. I mean, they're technically in the fourth hit. The question is, if we break through this 39.13, are we going to see it push down today? So right now, again, the Globex highs and lows have been really traps every single day this week. Let's see, that is about 2 o'clock in the morning. I would say right now, this is kind of where our kind of bottom and top is, and we're kind of sitting in the middle. Now, everything is positive. The VIX is down 2.2%. There's not really any headlines to really kind of start, kind of flaming fans on the fire right now. Because of what I see in here, I mean, China's doing some more stimulus. Nagel says, negative interest rates are a thing of the past, maybe for right now, but I don't think forever. Our top priority is fighting and mastering inflation in the short term. I mean, we're seeing a lot of hawkish comments on it. I think that's kind of starting to bring us back down, but the reality is there's not anything major today. No major headlines, nothing in there in the U.S. front that is really kind of sitting there saying, hey, listen, this is bad. So could we have a feel-good Friday after a week of just absolutely just getting crushed? We could. It's potentially there. I think the way to play this morning is kind of see what, where we are with things. If you took yesterday's low to the overnight high, you can see we're kind of getting close to that 23.6, that 23.6 level. And again, if it does roll down as far as it could, down to a 50, there's also levels down there. So, there's definitely some kind of play in it. The 23.6 level here is basically burned at this point. The 50 is still in range, so we're going to leave that fib on there just because people will step in, and there is technically a level right there that has been tested. If we can rally up on a feel good Friday and we get up to 39.74, I'd say, hey, that's probably where we want to look for a potential reversal. So that's NQ. Now, yes, NQ, we were talking about 12.131. We didn't quite make it. There was nothing over there. It turned at 5 o'clock in the morning, so not a major movement, but it is still a level up there if we can get up, and it's kind of the same scenario. If both of those continue to rally up, they'll be profit taking at some point, maybe end of the day, pull it back down again. But this is the strongest right now. NQ is up 1.25. Twitter, you can see, is gapping a little bit higher, although it's a little flat right now. Apple also gapping pretty substantially as well in the overnight. We'll see if it pulls back or not. And then Tesla, kind of the same thing, also gapping, has pulled back a little bit, but we'll see if that can take off. I mean, technically it says negative, but once it prints, those will both be positive. YM, kind of the same story, but YM is actually having a bit of a pullback. I don't think this is a major level where we are right now. Let's see. No, it's not. It's a supply zone. It's been touched twice. We're kind of hitting it right now. So I'd say right now it's kind of more on the kind of negative thinking, at least for YM. And YM is the weakest. So if everything does roll in negative territory, if at the open, it looks like YM would be kind of where we're looking for. And again, setting the trap in the same sense. There's your trap there, and there's your trap there in either direction. So again, right now, if we continue to see weakness, I would say be very, very cautious of the kind of the bear trap at 31,300 as it comes through and people start selling that one. Don't be surprised, and maybe even like a 1030 bounce off of that higher. Oil. So, yeah, oil. Yesterday morning, we were down here at 103.42, and we were like, hey, listen, this has been great for oil, which was weird because the markets were going down, and it's like, oh, yeah, recession. It's going to be bad. And we were looking for kind of some type of message, really. It's like, hey, this has been great. And then all of a sudden, it was literally the U.S. trader came online. It was like, no, we love our gas. And drove it $6 higher by the end of the day. It was just a monstrous move for oil. Now, Oil's bouncing around the same level. I would say, again, we do have a basing level that's been a top. It based, it broke. It used that as a kind of takeoff point to go higher and break through the 50% retracement level. There was a level here. I mean, I could mark this off and, by my standard rules and say, hey, look, right there was the pullback. And look, we touched. Right now, I'm looking for 107.73 being an area where we can sell out of. There's a little bit of a racetrack below it. It has hit it, so we know there's some buyers in there. And we can actually even probably shrink it just a little bit more, just to make the risk smaller on it. Whoops, I want to move that. I was looking to move the price tag. But 107.77 is kind of what I'm looking for in oil. I mean, I don't, as I said, we got about one more weekend before the gas prices jump. I can tell you yesterday that we had a little bit. It's funny. We don't really see gas prices go down very fast. Monday to Tuesday, it rose 10 cents. It rose another 8 cents from Tuesday to Wednesday here. And then yesterday, it dropped back down 10 or like 15 cents. So it was back down to like $4.30 or something like that. The line out of Sam's Club was like huge. It was all the way back out to the street people trying to get gas. Not that $4.30 is great. Like, it still cost me in the card that we have $75 to fill up. But I don't like that. I miss the days of $35. But yeah, so oil rallying up a little bit. We'll see where this one goes today. I would say, if anything, I'd love for it to come down. Natural gas actually is the one that is pulling back. It is at $8. It did go back up again yesterday. Kind of the same thing. It turned early morning. It kind of peaked yesterday at 11:30. About 11 o'clock yesterday, back up at $8.50, and now we're back down to $8. It's not necessarily cheap. We're looking for a breakthrough and got it. We'll take it off now so we don't confuse people with too many fibs out there. Whoops. Actually, that's the one I want to get rid of. This one right here. But right now, we're looking for this one to continue to push down a little bit, and we talked about $7.76. Gold, you guys can see what gold did. Gold continued to rise from yesterday morning, and again, the inflation story right now is kind of like, the Fed's probably not going to do enough. They think that we're well on our way of being, under control, and not so much. But we talked about 850 being a sell area. It did go from 850 all the way back down to 835, a nice little $15 run. We hit it again in the overnight, so again, still looking for this one to push back down to 814 again. But again, up at 840. I mean, quite a large jump. So looking for a push here. Silver is actually a bit more negative. It's already kind of hit. We talked about this level yesterday. It went to about a 1 to 2, and it kind of came back in the overnight and then pushed a little bit lower. If I extend it across right now, you can see that it's just a little bit over. It's probably about 1.5 to 1 right now, on its way back down to that 21 level. So again, silver typically will lead the way and move a little bit quicker. Currencies, as I said, pretty much flat right now. Even the cryptos are kind of flat. Bitcoin's down 0.3, Ethereum's up 0.7, and Doji's up. TLT also rising a little bit, which is kind of a little bit odd. And then obviously AMC, GME are also gapping. So it kind of looks like it's a let's kind of reset for next week. Let's get a little risk back on again. And again, with lack of any major headlines, it'll be something big over here. Not something big, but it'll be a big name that really is what's going to control the market right now. And the last thing we heard is, China's zero COVID policy is they just dumped $5 trillion into the economy. So to kind of pump it up. So we'll see. That's kind of it for today. I wish we had more, but that's kind of it. Friday with no major news, and going to the weekend, there's nothing over the weekend. And first thing we see is Monday at noon, which we'll talk between then and now, is Bailey speaking. So that's another big name as far as the pound goes.
Yeah, maybe it's instead of Feel Good Friday, it's just a reset Friday, and a lot of the instruments we're looking at.
Yeah.
With that, I want to thank you very much, Brian. I believe Todd will be back next week. Probably makes a lot of people very happy on the Feel Good Friday to hear that news. But with that, I wish everybody has a great weekend. Remember, trading involves risk. Just because there might not be a lot going on or a lot scheduled on the news, always maintain and manage your risk appropriately. You never know.
It only takes one headline.
One headline.
It only takes one headline. That's all you need.
Yep. Never get overly comfortable. Always manage your risk in that respect. Please keep in mind this was for educational purposes only. And with that, Brian and everyone, I hope you all have a great weekend.